to register, what should happen next?
Well, before a business registers for sales tax, and I'm assuming if a business is doing that, they've reached out to and identified a sales tax service provider to work with, an expert, an advisor. The two things that would be critical, in my opinion, would be one, to assess any historical obligation and map out a game plan with that advisor to ensure that before registering, they have made a determination about any historical nexus and historical obligations that they may want to address. Because once you register, in many states, you're precluded from ever addressing those historical liabilities. And that is often addressed through voluntary disclosure agreements, where you would have a third party anonymously negotiate resolution of historical liabilities and clean up that stuff on your behalf. And or you can do registration and backfiling. So that would be the first thing, is just to make sure you've considered that, mapped out an action plan for how you want to address that before registering. And then equally important is identify and implement a sales tax compliance solution. You don't want to be registering in a number of states if you haven't automated the calculation and remittance of those taxes, because quickly you'll find out that even in one or two states, calculating tax on variable local rates where customers may exist at the state and local level, and then preparing the returns and filing them can be really difficult to do on a manual basis. And automating that process not only minimizes risk by ensuring the accuracy, but it establishes an audit trail, and we'll talk a little bit more about that.
Why is sales tax registration more strategic than simply filling out an application?
Yeah, the ministerial act of actually filling out the application can seem very straightforward, but even filling out the forms, knowing how to fill the forms out, requires a little bit of experience to ensure that you're doing it in a manner that doesn't trigger all sorts of inquiries. For example, very simple example would be where it says your business start date. They may be asking the company, when did the business first organize or incorporate, not when did it begin doing business in that state. And if you answered that later in the application, it may say, what's your account start date? And you would probably want to choose some date in the future, like 30 days out, to ensure that you get the account and get the portal all set up before you have an obligation to begin collecting and remitting. If they ask your business start date and the business started in, let's say, 2019, and you put that date on the account start date, you're going to get all sorts of notices, because they're going to set the sales tax account up as of 6 or 7 years ago, and there are going to be all sorts of failure to file notices. Not that that can't get cleaned up, but you've just created a whole mountain of work for yourself. So there's a little bit of that going into the process itself. The otherwise ministerial process of filling out the forms is just knowing how to fill the forms out, but also knowing, going into the registration process, that you have identified an action plan to address and resolve any historical liabilities, and ensuring that you have set up any sales tax compliance calculation and remittance processes, i.e. software. You don't want to register and then go, okay, what's next? I have to implement software. That should all be done before you register for sales tax. Registration is really the last step we would do with a client when we're walking them through the compliance process of getting them identifying nexus, addressing any historical liability, and then implementing the sales tax software solutions for them, and ensuring that we have a process going forward for who's handling the returns. Oftentimes our clients will have us manage the compliance process going forward, which involves overseeing all the aspects of the sales tax software, but also ensuring that the returns are accurately and timely filed with each jurisdiction.
What What should a company understand about its past activity before registering with the state?
Well, the most important thing would be, is there overlooked historical nexus? If we register in a state, in many states, you have just shut the door on any opportunity to approach that state voluntarily and negotiate resolution of historical liabilities. So the most important thing any client can discuss with their advisor when they're talking about sales tax registration is, what are we doing about any historical obligations? Have we mapped out a plan to either register only on a go-forward basis, register and backfile certain periods, or resolve historical periods through voluntary disclosure agreements, or if a state offers it, an amnesty program?
How do you determine which states to register in and when?
Well, if you go through the process with your advisor and identify you have nexus and a registration obligation, the next thing you want to look at is, do I have a sales tax compliance obligation? I see I have nexus, maybe my sales have crossed that state's threshold, but going back to conversations we've had about identity, what is it, how am I identified as a company? How do I classify the products and services I'm selling? If we understand that, we can determine whether or not the state taxes what it is the business is selling. So even though you have nexus and potentially a registration obligation, if we look to whether or not the state taxes what it is you're selling, that's going to help us determine whether or not you actually have to register. Because oftentimes we'll look for a company selling, let's say, clothing, and we realize, oh, there's an exemption in this state for clothing, so you don't have a registration obligation, even though you have nexus. You're not deemed a retailer, and you would be filing a bunch of zero returns if you did register. So that's really important. And then in terms of timing, is just ensuring that that timing for registration aligns with our action plan for addressing and resolving historical liabilities and implementing sales tax automation tools into the compliance process.
Why can registering too quickly create problems for a business?
For the reasons I just kind of stated, probably the most important thing a company, two most important things a company would want to consider when they're discussing registration for sales tax is historical obligations. Have we mapped out a plan for addressing any historical obligations? And two, have we implemented sales tax compliance software? If we have not done those two things and we register first, we've created a mountain of problems for us. And real life example of that, a client came to me and they had another provider register them in 43 states. They did not have a plan in place for addressing historical obligations, which were now precluded in a number of states, nor had they implemented sales tax compliance software. So now they had a bunch of registrations and accounts coming in. They didn't know how to set it up, and they hadn't identified software to enable them to actually calculate tax in each of the states where they were now registered and remit those taxes. So we were kind of playing catch up, getting them implemented with software and then caught up and current with their sales tax filings, which were now delinquent in all 43 states. And then we went back and we looked at, well, are there opportunities still to negotiate resolution of any historical liabilities that you now realize you want to address?
Once a company registers, what ongoing obligations are they committing to?
As long as you have nexus and you're registered, you would have an obligation to continue collecting and remitting the tax in a timely manner. And that timeliness can change, because oftentimes a business will be set up as a quarterly filer, and then at some point the state may send you a notice in the mail, they may send you an email, or they may only post it out on the portal, changing your filing frequency from a quarterly to a monthly filer. So your obligation is to ensure that you're collecting and filing in a timely manner. And if that nexus footprint should change and you no longer have nexus in a jurisdiction, that doesn't necessarily mean you can right away close that account and withdraw your filing obligation. You have an obligation to continue filing under what is called trailing nexus. So in most states, that could be anywhere from an entire filing period after nexus ceases to exist, so maybe another quarter, or it could be as long as another 12 months after nexus ceases to exist. So your advisor will help you understand when you can actually close your account if your filing obligation does cease. And then there are obligations if you sell the business or close the business. There are responsibilities to ensure that the accounts are closed properly. The last return is marked final and that account is closed out to ensure that you no longer actually have any obligations outstanding.
Can you share a situation where a client was ready to register immediately, but you advised them to address something else first?
Yeah, the most common things, again, are going to be that there's an opportunity to address historical filing obligations through a voluntary disclosure agreement. So that would be one of the most common things that we will discuss with a company that's ready to register, is ensuring that they've considered thoughtfully what the potential historical exposure is and what the opportunities are to mitigate that liability, either through amnesty, voluntary disclosure agreements, or even backfiling in states. And then the other really important thing is just ensuring that there is a sales tax automation tool in place and a process for managing that software and the filing obligations going forward.
Can you share a story where the timing of registration made a significant difference in the client's outcome?
Yeah, a couple years ago, a client came to us and they had been acquired by another client of ours. And during due diligence, there were about 12 states where historical exposure was identified, and the need for voluntary disclosure agreements was built into the acquisition agreement. The company that was being acquired, that had the exposure in 12 states, realizing this and without it seeking the advice of anyone, just ran out and registered in all 12 states. Then the opportunity came to us to help them in those 12 states, and we quickly realized you've already registered in these 12 states, and in many of these states, they're not going to let you do a voluntary disclosure agreement. Fortunately, because we do hundreds of voluntary disclosure agreements with all the states every year, we were able to utilize our relationship to go back and say, look, this taxpayer simply didn't know. They intend to pursue VDAs. They just registered 2-3 weeks ago. They don't even yet have a filing obligation. Can we close those accounts as of the date of registration and then do the VDAs? And each of the states, fortunately, it worked out. We were still able to do the VDAs. But the timing, had they not consulted us and tried to do VDAs perhaps like on their own, a month or two later, the states would have said, no, sorry, you're precluded from doing a VDA. So the timing of when they did the registrations and not realizing the importance of addressing the historical liability could have really been problematic for them in terms of resolving all that historical liability.
What's the biggest registration mistake you see businesses make?
The biggest registration mistake that I see businesses make is registering before they have mapped out with a sales tax advisor an action plan for addressing any historical liabilities. And I would say equally important is the mistake of not identifying, implementing, and automating a sales tax compliance process prior to registration. Those two things are critically important and have to be addressed before we actually register for sales tax accounts in the state. We've had clients come to us that have already registered in states, and they're seeking advice on how to address historical liability that they or someone else has identified, or they're seeking help on identifying sales tax software. And you're already, if not precluded from doing voluntary disclosures in many states if you're already registered for sales tax. Even if that's not part of the equation and you simply want to comply on a go-forward basis, if you have registered and haven't implemented sales tax software, you're behind the eight ball, because you already have an obligation to be collecting and filing returns, and you haven't even identified a sales tax software solution. So the steps we normally take with clients are we will classify what they are, help them identify what type of business they are, and then classify the products and services they sell and map those to tax codes so that we can understand how they will be taxed, or if they have a sales tax compliance obligation in states. Then we look at nexus. Where is their physical presence nexus and their economic nexus? Where is their footprint? We then look at exposure and any historical exposure and map out a game plan for addressing and resolving any historical liabilities. While we're doing that piece, before we've even begun that piece of putting into action that plan for resolving any historical liabilities, we are identifying and then implementing sales tax software solutions for our clients. And once we've got that software up and running and tested, and we're confident in the integrity of its connection to the billing platform and the output that it's generating, then we begin registering or pursuing VDAs on behalf of the taxpayer.
What's the one thing a business should do before submitting a sales tax registration?
I would say there's two things. One is talk to a sales tax advisor about their nexus, any historical exposure, and how to resolve that. So that'd be one thing. And then the second thing is ensuring that sales tax software solutions are implemented.